Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 7th of June. So I've seen a week of new highs on the S&P that have never been reached before and some volatility in the currency. So we're going to jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that we've had plenty of action all the way up and all the way down through the 67 cent mark, and also the 20 moving average, which has been a very, very strong level that has held it up very efficiently. But it's also backed up by a roll reversal zone at around that 66.30 to 20 area that has been very, very strong right throughout this whole period here. You can see we've got lots of tests of this level, and it's proving to be very strong support right now, which is that roll reversal that we talk about. So look, it's had a pretty big range really for what it's been doing. You can see it's fairly condensed, but the ranges for this week have been basically from the bottom all the way to the top on each particular day. And even in today's session, we tested the 66.80, just slightly above it. And it's looking like it's coiling. Look, when we see this sort of action where the moving average is creeping up closer to the price action and the resistance above is holding up, you can see that the price is getting condensed into a smaller area. And a lot of the time that does indicate a bounce through. So one way or the other, we're going to see some sort of aggressive movement, but the way the moving average is pushing it up, you would think that the chances are that it's going to break through to the top and then start pushing on into that sort of 67 to 68 cent mark. So one to watch. Look, we've got to be very mindful. We're non-farm payroll week. We've got non-farm payrolls in the next 24 hours. So, yeah, the market will be relatively subdued probably towards the end of this week. But Monday is a different story. And then I think we'll see the action that we've been looking for here. If we get a close above, it's very straightforward in my mind. If we get a close above 67 cents on Monday, and that's where we start the trade, we start to look for series of higher highs and higher lows up to around that 68 cent mark. Pretty straightforward. And if we're trading below the 66.80 or even below the 20 moving average, then we're going to start looking for the shorts. I think I'm not really biased either way as to which way this can go. I think both of them have got their reasons for moving strongly in that direction. It's just a case of waiting for the daily really to close outside that zone. So pretty good trading coming up, I think. And this zone, if you've been trading it in between the 20 moving average and the resistance, has been very good. All right, we'll move over to the US dollar CAD now, and our what we're calling a descending triangle is still holding up. You can see that it got tested throughout the week. The whole range actually got tested. You can see we got moved down to the 136 down here. And then earlier in the week, and now we can see a high of 137. So that 100 pip range has certainly been tested, 140 pip range actually, but pulled back down to the top of the triangle. And also, what just as importantly, probably more importantly, a level of what we know is resistance at around that 137. So very interesting. No real surprise to see it here. Yeah, prior to a non-farm payroll again. You're going to hear that word a lot today because a lot of the currencies are paused at a level where they're expecting an anticipated move, of course, and this is no different. So we're sitting right under the resistance. Very, very straightforward again. If we're trading on Monday above 137, we look for the highs of 138 to 138.50, the two resistance highs that we've seen previously. But if indeed we're trading underneath the 20 moving average and underneath the 136.50, which is a very strong support zone, you can see right through here we've got very strong support. Then we aim for the bottom of the triangle, which is around that sort of 136. So pretty straightforward on the CAD, really. Over to the US dollar yen, and this one's been a little bit weaker throughout this week. You can see that we broke through the 20 moving average earlier in the week, recovered its gains up to the 20 moving average, but the only difference this time is that we're actually trading under the 20 moving average, not like it did here where it bounced straight up and kept going and came down here and kept going. This time it stayed under the 20 moving average even in its recovery, and you can see today's session is well and truly trading underneath it. It failed to make a new high to the previous high, which is always a little bit of a concern. It shows potentially a little bit of market weakness and a little bit of sentiment creeping in on that one. Pretty straightforward again on this one. We're at a very key zone, obviously around that sort of 150. We're really sort of around that 155.5-ish area. If we're trading above the moving average on Monday, we look for highs up to the 157.80 to 158 zone. If we are breaking underneath this level, and it's very important that we break underneath the 154.80 to go short. If we're trading underneath the 154.80 with a daily close after the end of this week, I would be looking for shorting opportunities down to that 152. So pretty good ranges on this one. We've got a couple of hundred pips either side, but very, very important to where the day closes at the end of this week after non-farms, whether it's above the 20 moving average or below the 154.80. All right, over to the dollar index. Now, this is on its, we've said it a lot, and it seems to be on its last breath every time we talk about it. But it is very, it's dire where it is right now. It's do or die. If it doesn't stop here, there's weakness impending all the way down to about 103.50. Really, it's a pretty solid drop for that 50 points that we can see. It's all about, I'm not surprised that it's support, obviously, at the end of this week, but it's all about where it closes, really, after we have all of the news out of the way. If Monday morning we're trading at under 104 and we've got a 103 in front of it, we're looking for swings all the way down to the 103.50 in the first instance. Any signs of lower highs and lower lows, we will be wanting to jump on in that theme. And basically trade it down to the 103.50. If we are above the 104.20 on Monday, then I'd be looking for closes and series of higher highs and higher lows up to the 20 moving average in the first instance, which is the 104.70 area, and then onwards and upwards to about the 105, depending on the strength. So really, it's a do or die level for it. There's no question about that. It needs to hold here. If it doesn't hold at this level, then the 103.50 and the weakness would more than likely set in. Of course, the euro is the one that you're going to benefit from in that sort of trading. It's looking really, really strong. You can see we've got higher lows everywhere. We've had that for quite some time now. It landed on all of the support that it needed to. It found support again here at that roll reversal zone at 108.50, and it's peppering that 109 close. Very similar in what we've talked about. If we're trading above 109 or even 109.50 on Monday, we can look for pushes up to that 110 area. It's looking strong. It looks like it wants to do it, but it still has to prove it, and we still have to have news that will justify that move, of course. So we would be looking for moves above the 109. We want to close above the 109.20 to be looking long up to the 109.50 and 110. But if it rolls over here and it closes underneath the 20 moving average and we're sitting back under 108.20, then we'd be looking for a little bit of weakness. Then, of course, the dollar index has picked up and would have had to have gone to probably at least 104.70 to 104.80, 90 to actually get the euro down to this level. So we really want to be keeping an eye on both. But if we're trading underneath the 20 moving average, so underneath the 108.20 on Monday, I'd be looking for shorting opportunities down to 107.80 to 107.50. But if we're trading above the 109 sort of 20 area, that would be the area I'd be targeting. I'd be looking for these highs here and jumping on board any short-term swings on the 1 hour or even the 15-minute if you're trading inside that session. So potentially some really good trading coming up in the euro, but again, no real surprise that it's sitting at a level of safety prior to the news. And finally, we'll look at the S&P 500. Look, all-time high for the week, like I said earlier. It's done nothing today, but no real surprise. It's had a really big move off this zone. Perfect trading, right? Like it broke to a new high, came back down, tested that key level there at the 52.50. We know that it was the line in the sand level. Sat there for a couple of days this week where we had doji candles where it really, really fought to stay above it. Bears tried to sell it down 2 times on those 2 big candles there, and you can see both times it rejected, and then it really shot up to a new high today. No real surprise that we've done nothing at all, and that's okay because it's waiting for the news, of course. We're not big on trading brand new highs, so what we'd be doing here in this instance, if it rolls over and shows weakness towards the end of the week on Monday, if we're trading underneath the 53 sort of 50 area, I would be looking at shorting opportunities back down to 52.80, 52.50. They're the areas that I'd be looking for either support, because a break of those levels is going to signal further weakness all the way down to probably 51.80. So you want to be looking for a potential roll down to 52.80 to 52.50 in that instance. If indeed it breaks to a new high and it's trading at a new high on Monday after this week, I would be a little bit cautious on taking the longs on that one. I'd be waiting for it to pull back to the previous high like we did right here. And as you can see, that worked out very well, and that's what you really want to do when a market is at all-time highs. So that's the best way to play the S&P. So I hope everyone's had a great week's trading. We've seen plenty of volatility, and all the levels we talked about last week we hit again. So hopefully you were able to take advantage of that. I hope you have a fantastic weekend, and I look forward to seeing you all next week.